Good day, everyone. We welcome you to this conference call organized to discuss Praj Industries' operating performance and financial results for Q4 and FY20, which were announced yesterday. I have with me Mr. Shishir Joshipura, CEO and Managing Director, and Mr. Sachin Rao, CFO and Director Finance and Commercial on this call. Before we begin, I would like to mention that some of the statements made in today's discussion may be forward-looking in nature and may involve risk and uncertainty. Documents relating to our financial performance were emailed to you. These documents, along with quarterly results presentation, have also been posted on our corporate website. I would like to hand over to Mr. Shishir Joshipura for his opening remarks. Mr. Shishir Joshipura.
Good afternoon, ladies and gentlemen. I welcome you to Praj Industries earnings call for Q4 and FY20. I'll be covering the industry developments and quarterly business highlights for the quarter, following which Sachin will take you through the financials. As the quarter progressed, an unprecedented challenge in form of coronavirus pandemic emerged, disrupting life and economy at a massive scale across the globe. In absence of a cure, lockdown appeared as the only viable alternative to save human lives. This led to an unprecedented shutdown of economies and human activities across the world. The complete impact on business of this pandemic is still to be ascertained. Praj operations were no exception, and we were equally impacted. Now, before I cover the business update, I would like to share with you how Praj is coping with the COVID-19 crisis. People care and safety was and is our first and highest priority, even as we started to work on other dimensions of business care, society care, and customer care as the lockdown was announced. Our facilities halted operations completely across our plants at Sanaswadi in Pune, Khandla, and Wada, Matrix, our R&D center at Uravde, and our HQ at Pune, and offices across the country for nearly 6 weeks. We undertook all the safety and sanitizing measures across all our facilities, maintaining full compliance with the government advisory. Forming a business continuity plan, we were able to shift majority of our employees on work-from-home model to serve our customers and minimize the work loss during this period. Our engineers adopted modern technology and developed tools to help our customers commission their plants remotely, as also help troubleshoot running units. When the law permitted, our people have traveled to sites, braving odds to help our customers operate their plants. Supply chains have been disrupted globally, impacting availability of raw material, parts, and components. As the economy reopens gradually, we have restarted our operations at all our production factories as well as R&D, and we are ramping up our production in complete alignment with the government directives. Our headquarters and city offices are still not fully functional given the local restrictions. However, our work-from-home model is working really well for the employees based at these locations. We are working closely with our supply chain partners to streamline supplies of goods and services. Our strong focus remains on conserving cash during these trying times. A strong focus on collection of dues and advances from customers, constructive dialogue with our supply chain partners, and focused inventory dilutions are key areas. We are taking a dynamic look at our costs to drive higher efficiency. We are undertaking different measures such as cutting down fixed costs, avoid discretionary spend, reevaluate our overhead expenditure, optimize our infrastructure costs, work from home policies, salary adjustments for employees, inventory dilution, etc. We are reconfiguring R&D costs for a deeper business impact. Innovation is DNA of Praj, and we will continue to invest in R&D initiatives such as advanced biofuels, renewable chemicals, and materials that will help us build our value proposition in a sustainable way in near and long-term future. We are not reducing our R&D expenses. We are thankful to our customers, supply chain partners, and employees who are helping us address the challenges of the situation. Let me now take you through the highlights the developments during the quarter. Leveraging strong innovation, our 1G business has attained a market share in excess of 75% in domestic market in FY20. To address the challenges of sugar glut and storage, government is encouraging diversion of sugarcane juice and sugar syrup for production of ethanol instead of sugar. This will also help improve the ethanol blend with petrol. In an important development, the government has allowed conversion of surplus rice available with Food Corporation of India to ethanol for making alcohol-based hand wash sanitizers and blending in petrol. This will help bridge the gap in demand supply of hand wash sanitizers and improve the ethanol blending percentage. Pharmaceutical grade alcohol across the globe may see increased demand as it has application in space sanitization and personal hygiene apart from medicines. Ethanol plants around the world has the infrastructure necessary for meeting demand in short term, and Praj technology in form of EcoSmart can help quick commissioning of capacities in short term and efficient operations in long term for production of pharma-grade alcohol with minimum modifications. Praj's two-step solution anchored on our patented technology EcoSmart puts us in a pole position to address this opportunity. We have a large global customer base and we are establishing communication with them for arriving at a comprehensive solution to address pharma-grade alcohol opportunity. Oil and gas industry is amid unprecedented crisis owing to combination of excess supply with an unprecedented demand drop due to COVID-19 pandemic that has resulted in a price collapse. However, domestic market capacity creation.
I'm so sorry to interrupt, but your audio for a minute was not audible, sir. Could you just repeat, please?
All right. So we have a large global customer base, and we are establishing communication with them for arriving at a comprehensive solution to address pharma-grade alcohol opportunity. Is this audible?
Yes, sir. Please go on.
Oil and gas industry is amid unprecedented crisis owing to combination of excess supply with an unprecedented demand drop due to COVID-19 pandemic that has resulted in a price collapse. This will have short-term impact on demand for ethanol in the international market in terms of attracting investments in greenfield projects. However, domestic market capacity creation is not likely to be impacted due to these oil price dynamics as India ethanol pricing is premised on sugarcane prices. In international market, brownfield expansion projects for pharma-grade alcohol may present an attractive opportunity. Due to longer cycle time required to build 2G ethanol facilities mandated under the RED II directives in Europe, we see a renewed interest in European markets for 1G capacity creation over the next couple of years. This means there will be coexistence of 1G and 2G in near future. HPCL has issued a letter to us on 22nd of May confirming transfer of license from Badam to Bathinda for the 2G biorefinery project. This reaffirms government's commitment to advanced biofuels program as specific in the national biofuel policy. Praj recently signed a cooperation agreement with CCAB E-Technology AB of Sweden to upgrade and commercialize base technology to produce advanced biofuels and biochemicals from forest residue as feedstock. As a part of this cooperation, Praj will add significant value to CCAB's value-add technology of converting forest residue in the form of softwood to ethanol to Praj's proven capabilities to improve, optimize, integrate and scale up advanced biofuel technologies globally. On the CBG front, we have begun commissioning of a pilot facility, which is a full-scale pilot facility at our R&D center. And there is increasing interest from industrial and bulk consumer segments that include MNCs sectors for CBG. As CBG presents a very effective for reduction while substituting LNG or LPG as a source of energy. PHS businesses continue to work on a strategy for focus on key accounts and innovative product offerings. On the engineering business front, our brewery business has been successful in building a market share of 80% plus in the domestic market. Internationalization plans of brewery business are showing results as we receive an order from Niger. We are pushing the innovation envelope in this business to generate new business opportunities in addition to our traditional business. Our sustained efforts to establish strong relationships with key MNC customers have resulted in our CPES business securing strategic supply status with several key accounts. We are concentrating on LNG, petrochemicals, industrial gases, and green energy segments. Praj value proposition now stands expanded to tenfold with the addition of operations and maintenance services to its portfolio. Our ZLD business recently commenced a multi-year contract for operation and maintenance service of treating effluent using ZLD solution for one of India's leading steel manufacturers. To summarize, we believe our people, a strong customer base, and our focus on customer value proposition creation through technology, coupled with conservative and prudent financial policies and operations, will help us overcome the current extraordinary situation. Once broader market sentiment stabilizes, we remain confident of continuing the growth momentum in the years to come. Before I end, I am delighted to share with you all that the United States-based Biofuel Digest, the world's most read biofuels daily, announced Praj Industries as ranked number 1 among the best places to work for in the Advanced Bioeconomy 2020, in which 279 corporations from the globe participated. With this, I will now hand over to Sachin for his comments on the financial performance.
Thank you, Shishir. I will now take you through the financial performance for Q4 and FY20, following which we will open the forum for your questions and suggestions. Revenue from operations for the quarter stood at rupees 296.29 crores as against 368.17 crore in the corresponding quarter of FY19. EBITDA for Q4 FY20 was 32.23 crores, whereas the last year's similar quarter reported EBITDA of 39.41. PAT was 24.86 crore in Q4 FY20 as against 33.36 crore. For the full year ended 31st of March 2020, revenue from operations stood at rupees 1102.37 crores as against 1141.1 of the last year. EBITDA for FY20 stood at 82.01 crore against 88.34 for FY19. PAT was 70.43 crore as against 68.22 crore in FY19. During the quarter, export revenues has accounted for 40% of the total revenues, bioenergy accounted for 63%, 30% from engineering, and 7% from PHS business. We must have noticed the effective tax rate has come down to 15% for the year. So this year tax was subjected under the normal tax, and because of that, company could utilize its VAT credit, and that's the reason the effective tax rate is looking lower. The order intake for the quarter was at 222 crores with 83% from domestic market. Of the total order intake, 72% came from bioenergy, 13% from engineering, and balance 15% from PHS business. The order backlog as of March 31 stood at 1083 crore. Cash and cash equivalent as of March 31 stands at rupees 226 crore. I now conclude my remarks, and I would like to thank you all for joining us on this call. We would now be happy to discuss any questions, comments, or suggestions you may have.
Thank you very much. Ladies and gentlemen, we will now begin the question answer session. Anyone who wishes to ask a question may press star and 1 on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handset while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. We take the first question from the line of Vikram from Philip Capital. Please go ahead. Mr. Vikram Suryavanshi from PhillipCapital, please go ahead with your question.
Yes. Hi, good afternoon. Am I audible?
Yes.
Yes, you are.
Okay, sir.
Good morning.
Hi, sir. Good morning, sir. And sir, can you share more on in terms of high purity outlook because of the order inflow has been substantially weak, and I guess this hand sanitization market, whatever opportunities will come, will that be part of our high purity or bioenergy? So I just want to get clarity because I think on website I saw that it will be part of high purity, and are we seeing some kind of orders from that segment also? So you can highlight outlook on high purity in these two regards.
So, Vikram, on the hand sanitizer opportunity, what is happening? So there are two distinct segments, right? One is the existing distilleries who have ready access to ethanol, and they're becoming producers for sanitizers. And the second is other independent producers of these sanitizers. Right? As we see, if it is a distillery-based customer, the natural affinity of that customer is to, obviously, because the deep relationships that we hold in that segment is with our ethanol 1G team.
Sir, this is the operator. I'm sorry to interrupt, sir. Your audio was not audible for a minute again.
Okay, let me start again. Am I audible now? Hello?
Yes, you are. Please go ahead, sir.
Okay, sorry. So, Vikram, I was saying that the hand wash sanitizer market is literally in the two parts. One is distilleries that have access to ethanol as natural product for them, and becoming producers for the sanitizers. And the second is the consumer care companies, independent FMCG companies, that segment, which do not have a natural access to ethanol, but who have different accesses to the marketplace in terms of retail networks, etc. So this is still a little bit early for us to comment, given the fact that we are still coming out of a lockdown, but we are seeing an interest being received on both these distinctive segments. So we are addressing, for obvious reasons, the distillery-based inquiries where the relationships are held by Praj Industries ethanol team. Whereas on the other side, maybe PHF is a better owner of the relationship. So it is currently split. That is number one. Number two, there's another thing that government said that up to July, there is no licensing or certification requirement because of the unprecedented scale of emergency and people are allowed. But I think there's a lot of those who are wanting to be serious players in the market are also waiting for the thing to clear out when the government does the inspection in July and certifies or otherwise any facility to see as to what the actual opportunity is going to look like. So still early days to call for what the size of the opportunity is going to look like. We have, as you are aware, we had put out and was technology and the engineering package as a part of our service to the society in general. It was available for the free download on our website. Almost nearly 400 downloads, all the way from Fiji on one end to United States and everything in between. So we did see a lot of interest from people downloading the technology part of it. We then went one step ahead and told them that if you do want to set up this capacity, we will be happy to help you configure the plant and put it together for you. So still early days because, of course, as we know that there's a big literal shutdown for almost entire month of April globally. So we are still assessing the exact nature of seriousness of these inquiries, but as time will progress, we will let you know.
Okay. And I have two more questions. One is that regarding when we have seen the price fixed for 5 years or for CBG projects. So are we seeing more traction or inquiry from that with this concern of the pricing has been now is no more in CBG project? That is one question. And second is on this, can you update us on this number of proposals are with the government for this benefit of distilleries and how is the status on that? So these are two questions.
So, if I understand correctly, the first question is about the traction on the CBG part. And there, as you correctly said, some interesting development that came in January along the pricing lines, which was a long outstanding demand to get some kind of visibility. So that's been a very, very positive development that you have a price visibility for 10 years at a minimum level. So this is something amazing for any business. As things would stand, and as all of us know, there wasn't much time between the announcement to the time we were faced with this unprecedented problem. So too early for me to comment, but obviously this has removed one of the big bottlenecks in the funding of the projects in terms of how they will be constructed. There's another development is typically these projects, each project size from what we know are below 100 crores on turnover, so they can go to an MSME segment now, which will be a good development for them. So we'll have to watch as to how that development also aids in development of the projects. What we have witnessed in the last 6-8 weeks is an increased level of dialogue, both from the prospective developers on the retail side, which is a success program of the equation, but also as I mentioned, we are also seeing increased dialogue from several MNCs because they see this as a clear path to reduce their carbon footprint, and they all have definitive targets on reduction of carbon footprint. So we expect movement to come through in both dimensions. I couldn't follow the second question. Would you be kind enough to repeat it, please?
The second question was on this distillery where the government has given interest subvention and all other benefits. So there were a number of proposals with the government for setting up the distillery. So what is the current status of these proposals and how you are saying that sanctioning of these projects or liquidity available for these projects?
So on the, I think one big development is this announcement from the government about allowing ethanol production from grains for blending programs, and I think that's a big development as I was mentioning earlier, which will aid to build the capacity and also bridge the gap. That is one clear distinct direction. We were in a seminar and one of the state government representatives said that yes, we have taken cognizance of this and we are willing to, we are now thinking of establishing and supporting, not themselves, but supporting establishment of 6 projects in our state. This is in Chhattisgarh, where there's a lot of rights, as you know, is available. So, early days yet, and I think what has happened is a lot of these developments, some of these developments also came very close to the crisis or during the crisis. So in order to actually gauge their impact on the business side, it's still early days to comment, but obviously directionally these are all positive developments. Similarly, on the sugar mill side of equation, there is a lot of movement about what to do with sugar because of the situation that is now created on account of lowering of consumption, and how do we overcome that problem, because on the other hand we are going to have excess a bumper crop. So how do we balance it out? So we'll have to see how the thing unfolds. But sugar production, sugar consumption has gone down, which means more, and as I was mentioning earlier, government is encouraging use of sugar as a feedstock for ethanol production, which can bridge a big gap on the capacity side. So in directionally, it's a positive development. Specifics we'll have to see as we unfold out of this situation.
And additionally, Vikram, this team is extended for 1 more year.
Okay.
Which is a clear recognition from the government that we need to do something more.
So I heard that this number of proposals are almost in excess of 300. Is that the right number, or if you have any updated number, I think it would be helpful if you can share that.
So, Vikram, on this, the number of applications, the number that you heard is around the number of applications that got filed. Then there was scrutinized and sanctioned. From the sanction, there was disbursement agreement, because these were subventions. So unless you have a loan, there is nothing to subvent. Right? So these were around subvention applications. So what has to happen along with the subvention part is also that the project needs to be funded by banks. And only on the loan component interest was the subvention available. So subvention is an incentive to put up the project. by itself, the project has to have its own independent approval on the funding side to sort of avail this benefit. But this is a post-event thing. In the sense that this project already is sanctioned by the bank, they're putting it up, and when they avail of the loan, then the subvention comes. So subvention is an aid to the industry to help them improve the viability of the project.
Right. Yeah, thank you very much, sir. I will come to you.
Thank you.
Thank you. Next question is from the line of Ashutosh Mehta from Edelweiss. Please go ahead.
Good afternoon, sir. Thank you for the opportunity. So my first question is pertaining to the 2G ethanol projects. So what is the status there? And out of the FY20 order inflow in the ethanol segment of around 750 crores, what will be the contribution from these 2G projects specifically?
Ashutosh, good afternoon. On the 2G status, the first project that we are building is for Indian Oil at Panipat. There, the work has gone ahead in full swing. All approvals are in place. The project is under construction as I speak with you. All the major long lead equipments have been ordered. In fact, we've gone to second stage now, where even the not so long lead items, the stage 2 items are also under ordering right now. Civil construction in full pace. Foundations are up. And our plan is the customer's plan is to finish the foundations over the next 2 months so that we can not be hampered by the rain monsoon season that will obviously come to that part of the country a couple of months down the line. On the BPCL project, they have appointed, as you know, Tata Projects as the EPC consultant. There also significant progress has been made. Already dialogues are underway. All the equipment contracting is underway right now. Site started. So activity there as well at a little different shift of timeline, if I can use the word, compared to IOCL, about 3 to 6 months behind on a different curve. Third is about HPCL. So as we had been mentioning in calls, we were awarded the contract for building the 2G plant in Badam in UP, and their first priority was to build the project in Bathinda. And that was awarded to DBT, ICT combined technology. And in the communication that we just received from them, in fact, just 5 days ago, they have informed us that they would like to shift our license to Bathinda, which is where we build the project for them, the priority project for them. And since it is a new development, so we will now begin work on that. So that's also a very positive development. So that shows a path forward for the third project to be built as well. On the fourth one, there is still a discussion going on. What are the viable alternatives for them? Some internal issues on the DBTR board, on viability, etc. So that's the fourth one. That's happening as far as India 2G projects are concerned.
Okay. And so what would be the contribution in overall order inflows from these 2G projects last year in FY20?
So we received an order from BPCL last year. So about 100 crores of contribution on order booking is sitting from 2G.
Okay. So we still have 2 critical equipment orders yet to be booked. That should be done in FY21, if I'm not wrong.
Yes. So HPCL looks to be progressing in that direction now.
Okay.
The fourth one of NRPL, I would still hold my comment.
Okay. Fair enough.
It will happen. It will definitely happen, but when is the question?
Okay. So second question was related more towards the financials in Q4. So we have seen some sharp reduction in raw material cost as well as employee cost during this quarter. Any specific measures that we have taken, or was it related to mix or anything that we should be aware about?
Sachin, you want to take this question?
Yeah. See, this spike in the contribution I have seen, you're right, it is because of the mix of the revenue or the mix of orders which we executed during this quarter. Maximum was coming from exports, almost 40% export orders got executed. So that has helped us in having the better margin. On the employee cost, there was a provisioning which we used to make for the incentives on the basis of the performance of the company, which we decided in the quarter 4, looking at the overall number, the way in which it was heading post-COVID scenario, we have not provided that kind of a number. And that's the reason why you have seen the reduction in the employee cost during quarter 4.
So is it that there is also a reversal of the first 9 months of provision that was made?
That's right. You're right. You're right.
Fair enough. So just one thing on the tax part. So going ahead, what should be the effective tax rate we should be working with?
See, our estimate is that we should be in a range of 20% of effective tax rate.
Okay.
Because we still have some MAT credit reversal which is possible in next 1 year. So we will remain in a range of maximum 20% kind of a thing.
Fair enough, sir. Thank you so much, sir.
Thank you, Ashutosh.
Thank you. Next question is from the line of Ankush Mahajan from JM Financial. Please go ahead. Please go ahead, sir, with your question. Yes. Mr. Ankush Mahajan, your line is not audible, sir.
Is it audible?
Yes.
Hello.
Yes. Go ahead, sir.
Yeah. Sir, I want to know about the outlook on the export business. Now it's a 34% revenue from the export side. And how is the outlook for the order booking from the overseas market, considering this COVID-19 situation now?
So, of course, very clearly, as you see, the situation is extremely dynamic right now. And for anybody to take a looking glass and predict is not possible at this stage to say what could happen. We are using, as I mentioned, work from home model. The good news is that customers abroad are very used to interacting over the e-media, so that becomes e-platforms, that becomes easy to, but still we're not able to be physically there in the marketplace. So obviously we are then referring to something which is very definitive in nature. We are not able to create. Even on the creation side, we are creating webinars for our prospective customers, we are existing customer base, and doing the best job that we can. Having said that, and I would say that given the model, the way we deploy the technology and work from home basis, it's been very, very successful. We've been able to establish connect with a lot of leading customers here, and establish a dialogue with them on what the needs are, what can we do for them, how we can respond to inquiries. So we are creating quotations and submitting to them because the world is getting used to working remotely. It would be a little premature for me to say what would the numbers look like on the export side right now, because we are just about beginning to get out of this lockdown. So perhaps next quarter, but as of now, it will be premature.
So on the domestic front, sir, how do you see the investment for ethanol distilleries? Not for the next, I mean for the next 2 years, investment in this sector?
Good question. I think what's very important to understand is that what's the demand in India, and we are now talking of returning to a normalcy situation, not during the last 8 weeks, but when we go back to normal situation, and we know that there's a huge gap between the demand at 10% blending rate and the production of ethanol in the country today. So we need to more than double the current capacity to just meet the demand at 10% blending rates on the government. So from the demand side of the product, there's a big push that is, or a big pull that is available, and which of course then should drive creation of capacity. On the other hand, the developing situation on the sugar very clearly indicates that there will be a push to produce ethanol on different routes and not just stick to molasses B and C routes on the syrup side of the equation. And we are currently engaged in dialogue with several producers to see how they can use syrup for production of ethanol, because from syrup obviously ethanol quantity will be higher. More important than that is also the fact that there's a big technology play there, because you cannot store syrup for long period of time. It goes bad. So you have to treat it specially, store it in a special way, and then use it in a specific way to produce ethanol out of it. It's a requirement, and that creates a business opportunity for us because we have the technology. On the syrup side, as you probably would know, As a company, we have very deep experience internationally. Our famous Colombia projects were all based on juice and several others after that. So in terms of converting juice to ethanol, there is a very rich, very deep experience available with the organization, and that we believe will be put to good use.
So the last one is, if we deduct console minus standalone, so this high purity business has done a very better margins. So any outlook, sir, for these the sustainability of these margins for the high purity?
So we have embarked on a plan, as I had mentioned in my remark as well, to ensure that we deploy a strategy of focusing on a few key customers very, very strongly, which obviously enables us to not only create deep relationships, but also create better solutions, more understood solutions, and if we can create a higher value, we can also capture part of it, which is what we see reflected. There's also a push for selective internationalization in the business, and we will see how that develops as we move forward.
Thank you, sir. That's from me.
Thank you.
Thank you. We take the next question from the line of Sadanand Shetty from True Equity Advisors. Please go ahead.
Yeah, congratulations, Mr. Jishipura and your team for the top ranking. Can you please share me the metrics that has been evaluated for this? That is my first question, and come to next question after that.
So, Sadanand, as I mentioned, the magazine.
I'm sorry to interrupt again. We had the audio disturbance from your end, sir.
Sorry. Can you hear me now?
Yeah, it's better now.
All right, sir. So thank you so much for your good wishes, Sadanand. As I mentioned, this is a global publication with a very high following. So they have their own methodology. They poll it among their members. I think that's what probably they do, and ask them to rank these 297 companies that participated in this globally, and then they come out with a rank. We have no visibility to what exactly they want to, what exact criteria they use, because they obviously their own internal methodology. I hope that answers the question. But it was really a moment of pride that we were rated, and there were some very big companies out there who were also part, all the big oil majors, all the big green energy companies globally. So 297 were there.
Thank you. You talked about managing current situation. Is there any change in your business priorities in the medium term, which has an impact on your business plan and CapEx program?
So the way we look at it is, of course, we have to evaluate our response to the situation as it develops, and different segments will need differently calibrated responses, and that is what we are currently working out. In terms of CapEx, we are not a very CapEx-heavy company, so that's the good part. What is important for us, and which is what I mentioned, is our R&D expense. We are a technology-centric company. What we have done is we took a decision that there will be some, cost cuts programs and things, but we will not cut any cost or reduce any budget for R&D. We'll continue on our R&D program. With the only thing that we've done is we said, all right, let us understand what can create a deeper impact on our business vis-a-vis our earlier program because of the change of circumstances. So that we have realigned our expenses, but other than that, our R&D program continues on the same cost level, the same budget, no change for them. Except that they are a bit reorganized to have a deeper impact. On the side of CapEx, as I mentioned, we are not a very heavy CapEx company. Each business will have to evaluate, for example, our high purity business, what happens to the pharma segment as we go forward. Our main core bioenergy business, what is the development in different economies, and maybe we have to give different responses to different economies. It may not be same. So we are aligned, we are agile, and we are aware of the fact that one shoe may not fit all, and we'll have to create differentiated responses for different people.
Thank you. I'll join the queue.
Thank you, Pradhan.
Thank you. We take the next question from the line of Hitesh Agarwal from UTI Mutual Fund. Please go ahead.
Yeah, good afternoon, sir. So my first question is, if I look at the inflows in exports, it has been quite weak this year, especially in the past 2 quarters. What has led to such a sharp fall, and when do you expect it to recover back?
So it's about a good observation. Yes, we have seen some slowing down of order inflows from our international market. Couple of reasons. One is obviously a slowdown in capacity creation that we were witnessing. You know, United States had a very different problem in terms of, if I remember my numbers correctly, over 60% of the ethanol plants in United States have closed down, shuttered over a period of time because of the oil crisis and things like that. But it's not that they did. That was also evident for some time, and the slowing down on the ethanol offtake, that the policy that were happening. But different markets have seen different levers that have come into play. We have seen not too much of greenfield capacity being created in several of our leading markets, like say Southeast Asia or for that matter in South America, which had a different set of problems. As they were coming out of this curve, and we were beginning to see green shoots in terms of definitive inquiries, definitive interest, where dialogue with progress, we were stuck with this global problem. So we'll have to see how they reopen and how we will recalibrate. Early for me to comment on what or how it will happen. We are in close touch with our customers. There could be opportunities that may emerge out of the current situation as well. We'll have to see as to what actually. I'm not able to predict, but from the looks of it, maybe farmer-grade alcohol could become an opportunity as we move forward. I'm not able to put a definitive figure yet on that for the obvious reason. We are also the business of ours, which is very strongly export-oriented, with our chemical process equipment and skids business. There we have, I would like to submit that we have made some deep relationships with our customers. We have signed a couple of agreements. But again, the current situation has sort of pushed everything out on a different timeline. So we'll have to wait and see how the recovery plan happens at our customers and as well, and their customers, and they calibrate accordingly.
Okay. And next, on the domestic side, again, there seems to be some hurdle we are facing in converting 1G opportunity into inflows. So can you touch upon what are the challenges and by when you expect them to resolve in converting the 1G potential into inflows?
Okay. So as was also earlier asked, so I think we all know that there is a very progressive set of policies that were announced by the government to drive the ethanol blending program in the country and also the ethanol production, which has, interest subvention program, the policy for blending. There have been many steps that have been announced in the National Biofuel Policy in 2018. When there was a rush of people wanting to set up, they feed up the feedstocks. So there were differentiated prices based on feedstock. So several levers or several incentives, in a manner speaking, were put in place by the government. So great work done by them. However, two things. One was that the natural producers of ethanol, many of them had stressed balance sheets, sugar industry especially. Not all, but many of them. And banks were averse to lending to them. So that became a big bottleneck to be resolved. So funding, so people had the project, they had the raw material, they had the end market, but the mechanism to actually tie this together and a stressed balance sheet to create a perfect mix out of this was something that was not happening. I think sugar is on the negative list of the banks for lending. So there are many of these factors on the ground in terms of capacity creation, not ethanol. Ethanol is not on negative list. The sugar is on the negative list. So I think what has happened is the capital formation has taken longer than one would have desired. So that's one very clear issue. Last year specifically, we also saw a very different situation emerge. That Maharashtra had a very low production owing to both drought and excessive rains. So that created some imbalance in the system. based on whatever has happened on the monsoon side in the last year, finally, we expect that over the next couple of years, good cane crop to come through, which is also reflected in the recognition the government is now pushing for syrup-based production, because syrup obviously can convert much larger ethanol volumes compared to sugar-based molasses. So we do see some positive factors coming into place, but again, those are in a normal market scenario. What happens post-COVID in terms of how the recovery rates are? We have several interests from many companies for understanding how syrup can be put to use in the coming season, which is in October. And as I mentioned earlier, syrup needs treatment to store effectively for a year. It allows them to operate on syrup for 1 full year, which is a very, very big plus for the capacity. So there are additional positives, if I can use that word, for the industry to switch to syrup. We are very close to that. We are in the pole position in terms of technology, in terms of experience, customer relationships. So we'll have to see how this unfolds.
Yes, sir. So lastly, if I read news article, it seems like the work on some of the bio-CNG plants in the country has already started, like 4 projects in Tamil Nadu and all. So in your assessment, how many plants are under construction on bio-CNG, and in what proportion of plants Praj is executing the project?
So as I was mentioning earlier, the big problem on bio-CNG from a raw material stage of a press mud or an agriculture-based feedstock to bio-CNG conversion, CBG conversion as the case may be. There was a big bottleneck on the clarification of the pricing, because pricing was not visible beyond 1 year, as beyond this calendar year. That has now been resolved in January, and government has now given counting this year 9 more years of visibility on the pricing, which has been a very, very positive development on that front. Just so that just to track a little bit, we already have over 55 plants commissioned in the country based on spent wash-based biogas generation. So this is not the first plant. So it's a different feedstock, that's it, right? Spent wash is different. So there the focus was on treating the effluent and taking the biogas as a byproduct. Now, when this program comes through, people will put it up as a main product. So there is obviously a little different approach, treating effluent versus treating the output byproduct as a main product. So that is calling for a different set of, because now it's no longer an effluent treatment plant, it's a production system. Okay. As I had mentioned in the past, we have already, and the one big source for that is the press mud coming out of the sugar mills. We are building country's first press mud-based plant of a very large size in north of India already. It's under construction. As we speak, we have already bagged orders for another one this year already. So the movement is visible on the CBG side. From our knowledge base, and as I was mentioning earlier, there's another segment, very interesting segment that is emerging, and that is the carbon footprint reduction based approach for CBG plants. And we are very clued in on that as well. So several dialogues underway there as well. So we'll have to see how when the schemes start to normalize, at what speed they come back. From our dialogue that we have been having, and we asked this question very specifically to some of our customers, saying, so when you come back, does carbon footprint reduction or sustainable form of energy or cost reduction in energy, does it take a back foot? They said no, to the contrary. So that's the good news for us. So we are only hoping that things return to that fast, return to normal fast, and we are able to build from this.
Okay. And sir, lastly, just a follow-up. You mentioned on the gross margin expansion, I missed on this. So what led to gross margin expansion, and is it sustainable? Because I see it's almost 20 quarter high right now.
Yeah. So I was mentioning about expansion has happened on account of the export orders which got executed during this quarter. So it's a mix of revenue which has contributed in the higher margins.
So going ahead, do you expect it to be kind of a sustainable range given the way we are expanding into new projects?
Look, not necessarily that this will continue in the similar thing, because we'll let us see how the composition of sales happens in the coming quarters and what will be the composition from the exports and domestic. Depending on that margin will change to that extent.
Okay. Thank you. That's it from my side.
Thank you, Dipesh.
Thank you. Next question is from the line of Sanjeev Zarwani from Qtr4 Securities. Please go ahead.
Yeah, sir. Thanks for taking my question. So my question was on the cash and liquid investments that is there on the balance sheet. If you could tell us that.
So Sanjeev, the total cash and liquid investment which we have is in the range of 226 crores.
Okay. And sir, regarding your thoughts on the buyback and dividend policy going ahead.
I don't know whether you noticed or not, we have already taken a decision in yesterday's board meeting that we are not going ahead with buyback.
Okay.
Considering the current situation and to look at the conservation of the cash, the board has not approved the resolution to go ahead with the buyback at this point of time.
Okay. And sir, thirdly, we have a decent order book, which is like up in double-digit levels on a year-on-year basis. But the first 2 months of current fiscal has been, because of the restrictions, it has got kind of impacted. So, are we in a position to recoup the revenues in the remaining months of the fiscal, so that we would be able to manage the revenue level of last year, at least?
So there are two dimensions here, Sanjeev. One, can we execute and produce that are required to meet this demand, this number? And do we have capacity to do that? The answer is yes. From the perspective that we internally have that capacity, the answer is yes. Mm-hmm. However, there is another dimension to this, and that is the preparation on the end of the customer as well. You know, how they are prepared, or their balance sheets are, or their loan disbursements are, their project schedules are. So, and there is not, we have come through a period when everything was sort of shut. So, we are not in a position to ascertain the second part. We have broad level confirmation from them that yes, they're not scrapping the project when we are going ahead with it. That's a good news. Okay. Yeah. So this is a good news, as I said. However, for us to ascertain their exact cash flows, when will they, maybe it's a little too early for us to comment on that. In terms of capability and capacity, we can. We have to marry it to the market forces as well.
Okay. All right, sir. That's it from my side, and all the best.
Thank you.
Thank you. We take the next question from the line of Saket Kapoor from Kapoor and Company. Please go ahead.
Yes, sir. Good afternoon, sir, and thank you for the opportunity. Sir, firstly, the government has now mandated that ethanol can directly be produced from the sugarcane juice itself. And so what kind of retrofitting are you expecting going forward, Mane? What can be the landscape on new order intake or the retrofitting that can happen in the existing distilleries?
I'm sorry, but in between I was losing you, maybe because of my connection. Did I understand the question correctly? That with syrup, what's likely scenario?
Yes. Sugarcane juice part on this, sir. I was.
All right. So as I was mentioning, that sugarcane juice to ethanol is a route that is open. Number one. Number two, we commissioned. We have over 10 years of experience now in designing, manufacturing, installing, commissioning, and tracking performance for several plants globally based on juice to ethanol route. So very, very rich experience with Praj as a company, which is absolutely unparalleled. So that puts us in a good position to serve this need that will be likely to emerge based on syrup. But as I was mentioning to you, syrup has two dimensions. One is, of course, that it gives an increased yield on ethanol side, no question. On the second, you cannot store syrup just like that for the full year. If you just want to run it in the sugar season, that's one way to look at it. But then that is unnatural because the demand for the product is right through the year. Then ethanol is the product.
So if you want to run the plant for the full year, I'm saying if you want to run the product, the ethanol production for full year, because the demand for ethanol is for the full year, you can't just the juice itself will not be enough, because that will not be possible to store safely beyond the production season, which is just like 150 days in a year, maximum 120, 150 days in that range. So what you do is you have to convert that to a storable form of syrup called what we call it biosyrup. So you need to, so there's a processing required, there's a conservation required, and then there is a reorientation required for the plants to make that happen. Then you can run it for full year. Okay, and that's the technology that we have with us. So we are expecting there's a lot of dialogues that have opened right now, several dialogues with the India-based sugar mills and ethanol producers to see how this could be done in the next season. Given the situation from where we are coming, this is still early days for me to say, okay, this doesn't obviously worth X crores in this quarter versus that quarter. That is too early to say that. But a very definitive dialogue is open. There's a lot of interest. We have the technology, we have the experience. There's a good case, good financial case for producers themselves. Therefore, it should be a positive development.
Okay. And what kind of yield improvements are you seeing, sir, in this case? If we take both aspects into account, the storage part and the application for it to hold on, how much? What is the delta in going through the direct part and then going for the molasses one?
No, that's what I'm saying.
The arbitrage.
Yeah. So you have to. What's the product mix that sugar cum ethanol complex will decide for itself? Is a factor of many things, right? What is their own molasses production? What is their position on sugar? How much of syrup they want to divert? How much they want to produce during the season versus after the season? So it's a little complex calculation to be done, which we are ready with, and we are sharing with our customers. I'm not able to give you a ready thumbs up kind of a rule saying this is what happens. Except to tell you that the numbers that we have run clearly indicate that you are able to, this is the revenue and therefore margin maximizers approach for the producers to opt for the syrup route.
Okay, so it is a profitable one. It is and there is a payback there then. Whatever the capex they will be putting up.
Yes.
And so for say 100 liter per day, kiloliter per day distillery, what kind of the retrofitting cost can any ballpark sir किस तरीके का capex उनको करना पड़ेगा?
As I said, that depends on, because is it that they will not produce sugar at all versus that they'll produce some sugar versus they'll put 60%. So this is a complex question to answer for me right now.
Okay. So sir, आपके लिए business opportunity क्या है ये भी नहीं quantify नहीं कर पाएंगे.
So as I said, that because of the fact that the situation is
variable,
there are too many variables. So if I hazard a number, I would not to you to think कि आपने ऐसा बोला था अभी तो ऐसा नहीं हुआ, ऐसा हो गया, ज़्यादा हो गया. So we'll have to wait.
Correct. Taking into account what the situation. Yes, sir. Thank you for the reply, sir. And taking into account what the current situation and the crude oil dynamics that are playing out, what should investor look forward for companies like us going forward in terms of revenue, at least revenue side? What kind of distillation can we expect, sir?
So as I was mentioning earlier during my comments, that in India, the oil prices have no impact on ethanol. Okay. Because in India's pricing mechanism, ethanol prices are linked to sugarcane prices and the feedstock.
Correct, sir.
So no connection to what happens. As you know, the government just keeps increasing the duty, excise duty on the petrol, so the prices don't remain same. So there is no likely impact of oil prices, and I'm saying oil prices, onto India's ethanol. The current bit of imbalance that you hear about is because of the fact that the consumption itself has dropped because of the mobility reduction. That will come back to normal soon. Right? So that's one dimension. Internationally, different markets are behaving differently. For example, in United States, one fact is that nearly half the capacity is shuttered of methanol, right? But the rest of the half which is there, they are wanting to become more efficient in their operations, right? They want to cut out their operating costs. So that creates an opportunity for us because our technology can help them do that. Okay. So maybe opportunity present in United States, the situation is like that. In Brazil, it's a very different model because there the producers have flexible model between producing sugar versus producing ethanol, right? And they are at a different business cycle compared to where sugar season is right now. So we will have to see different markets will have and what happens to the sugar production. In India already we have seen a dramatic drop in sugar consumption over the last 2 months for obvious reasons. So all these dynamics, but one thing is there in all these dynamics, one dimension that is one indicator is that the ethanol consumption in India is not impacted except for these brief mobility related issues. So it will say there's a big gap between what is required versus what is being produced. So that is another driver for the demand. In the international markets, the demand for technology-led solutions will be higher as against setting up a new greenfield project or anything like that. And we'll have to see, and next quarter when we talk about, we'll also have some clarity on the pharma-grade alcohol, what's happening. So there will be different drivers coming up that can emerge out of the situation on the other side of the curve.
Right. And for the US front, you told 50, they are running on 50% capacity. What demand destruction is the only reason? What is the reason why they are on?
Yeah, it's a very dynamic market. So as I said, that one big reason, of course, is the big drop in mobility, right? Big drop. The second one is what's happening to oil prices, because there the ethanol prices are linked to oil prices. They are not linked to sugarcane prices or corn prices or anything like that. Okay. There's a dynamic at play. The third dynamic, of course, is the policies that the governments in different markets announced. In the US, some time ago, they announced that the small refiners don't have blending obligations. The large refiners have blending obligations. So different dynamics. I was mentioning about Europe, for example, in my opening remarks, where I said that our understanding at the beginning of this year was that because of the RED II directive, there may not be any new creation of 1G capacity. But now, with the realization that 2G capacity does take longer time to establish on ground compared to a 1G project, they may actually consider setting up some capacities locally on 1G side to bridge the gap. So different factors are playing out in different markets, and we'll have to tailor our response for every one of them.
So in all, it is not a grim picture if we take our industry. So we only have to weather the storm.
Yes, I'm just looking at weather the storm that every industry has to do.
Every industry has to do, right. Other than that, it is not the problem of more business avenues are open up. So it is only for us to rightfully grab and position ourselves correctly. That is what the sum total we can take home.
That is correct.
And other than that, sir, you were speaking about formaldehyde. I missed that opening remark due to poor connection. Sir, अगर आप फिर से बताएं कि barring the ethanol one and that 2G ethanol, which other arenas are there where now Praj is exploring?
No, so I think I mentioned that worldwide the need for pharma-grade alcohol is likely to go up because of the huge usage it may find in safe sanitization and personal sanitization, because alcohol is the base. So very early days yet, but we expect that may, and when that happens, the natural producers are the ethanol producers because they already have the most of the infrastructure. We have a technology called EcoSmart that allows us to position ourselves in a good way. It's a very proven technology. So we'll have to see how that scenario unfolds.
And what kind of business opportunity, sir, we are looking in this formaldehyde space?
Not formaldehyde. I don't know yet to tell you a number. All I'm saying is we know that right now the spaces are closed, right? All the big public spaces are closed. They are not open. The offices and all that. But as and when they open, whenever they open, there will be a big sanitization drive, right? Which will be on a constant basis. So that is likely to, and I'm saying that's likely to create demand for pharma-grade alcohol. Okay. So how that thing develops, we will have to see.
Right. Thank you for all the elaborate answers.
Thank you.
Thank you. We take the next question from the line of Arvind Joshi from Bachelor Advisors. Please go ahead.
Yeah, good afternoon, sir. I just had a query. The recent stimulus that the government announced for the agriculture sector had a large amount for agri-logistics. Does this include the agri-logistics and the aggregation mechanism that would be needed for our CPG? Because that will provide a very big missing link in our plan.
So I think the details are still not out on that. So that is number one. Number two, you are right. Any stimulus on the side of the feedstock will obviously aid the industry. But very early days for me to comment because the details are still to be out. And we all learned that.
Okay. Especially in the light of this migrant problem that we are facing, with so many people have migrated back to UP and Bihar, I think we could have a very strong position to explore that. That was the first view I had.
What you're saying is very valid, and I think we'll have to see as to how this whole thing, in terms of the people who shifted back, would they look for?
Yeah, they could find employment there.
Yeah,
exactly. Okay.
Yes, will they not come back? So those are questions on which what I call societal models are still being formed, and economic models will have to see. But right. Yes, any move that, because this is a clearly and just we have always been arguing that this is a technology that creates employment in the rural sector. We have talked about the fact that the whole concept of circular bioeconomy is this, that A, nothing is wasted, B, it creates a local capability, C, it creates local employment, especially at rural scale, which is very, very critical. It is foreign exchange accretive. It is efficient. It is greenhouse gas efficient. So it is environmentally friendly, societally friendly. It is economically viable, and therefore we should get a lot more push. And what you said right now is clearly in the direction that there will actually be a possibility to create large scale employment in the rural side.
Okay. And sir, one more thing I just wanted to know, do you see any silver linings to these dark corona clouds? Any chances of migration of manufacturing capacities migrating from China, especially in the critical equipment section, and especially in light of your strong tie-ups that you've been able to build up with several people like Bechtel and all? So would that open up some fresh avenues to our business?
Our current view is that there are two dimensions. There's an emotional dimension and there is a rational dimension, as I call it.
Right.
Mostly, everybody wants to create alternative capacity, right? Alternative source. Rationally, it takes time to create capacity. That is number one. Number two, I think we have to be aware of the fact that and I'm talking now more generally, that we have to be, at the end of the day, if it takes 1 year, 18 months, 12 months, 9 months, 6 months, whatever it takes for the fuel industries, at the end of the day, we'll have to be a similar level of efficiencies and cost position. There is no taking that away, eventually, when things settle down. Yes, there is a risk perspective, and from that perspective, I think people will look to diversify their sourcing, so which is good. We have to be fit, we have to be competitive, and we have to be able to stand right shoulder to shoulder with every competition in global arena to win. That is not being taken up. The only additional dimension that is coming is people saying, okay, I never thought there is a risk, because nobody envisaged that such a thing can happen, where the whole globe is shut. Now they're saying, oh, so the risk can come in dimensions that I have not thought about. So at least whatever risk that I know of, let me try and mitigate that. So that should create opportunity for us. Yeah, we are ready. We are already at a company level. We have a global footprint that's been Praj's motto for years, almost since its inception, that we would like to be having a global footprint in our core business areas that is value accretive practically in every economy. So that's the positive side. We understand.
Sorry, please. Participants, please stay online while we are just trying to reconnect Mr. Shishir Joshipura to the call. In the meanwhile, would the other speakers like to just take over while we are just reconnecting the chairperson?
So Arvind, Shishir was giving you an answer related to what will be the implication because of the shift. Shift is definitely, we are also eyeing for that. We are also having a very close monitoring of that. We believe we will have some kind of advantage of our relationship which we have built up in our critical equipment story. Mm-hmm. But as he was also mentioning, it's a little time-consuming process.
Yeah, I can understand that.
We will definitely see a shift, and we are completely aware about and in touch with our customers to build up that kind of a relationship.
Okay, fine. Thank you and all the best.
Thank you very much. Thank you.
Well, ladies and gentlemen, that was the last question for today. I would now like to hand the conference over to Mr. Sandeep Badkamkar for his closing comments. Over to you, sir.
So first of all, thanks everyone for your time today. If you have any more questions, you are free to write to us on our email ID info@praj.net. Thanks again for your time and have a nice day and stay safe. Thank you.